This is Boss Man from Swing Trade Snipers, and I'm back again with another video. Today, this video will be titled, Why Are People Scared to Trade Daily and Weekly Contracts in the Option Market? Now, I've been trading for a few years and I've done a lot of education on this, and that is the reason why I'm making this video. Here at Swing Trade Snipers, we have a motto, or shall I say some questions. Why and why not? Okay? And we using that to anything in the stock market. Why and why not? If you tell me I can't do it or I should stay away, why? Why can't I do it? Other people are doing it. What do I need to know to do it? We want the answers over here. So that's what we've been digging for. So that's why I'm asking you guys, because I hear a lot of people telling me, stay away from the dailies, stay away from the weeklies. You'll lose your money instantly. And I'm not saying that they're wrong, but what I am saying is, why not? Why can't I do it? Nobody will show you. Well, I found out the reason why, and I'm here to give it to you guys today with some evidence. Now, I've been pleasured to be taught by one of the best traders that I've seen so far, and his name is ICT. So what I want to do is I want to bring ICT to the hood, because when I listen to the man talk, he talks from where he's from. But I know I'm hearing people telling me they like the way I talk because I'm talking just like them in our communities. So let's do that, okay? Today, I'm going to show you guys and help hopefully get rid of y'all fear of trading these contracts and showing you the reason why people don't trade these contracts, okay? So right now, what I want to do is I want to give y'all some examples, okay? If you follow ICT, he clearly shows you where to get in and where to get out in the market, time and price. When you get good at it, you literally know these things. So before it happened, you got a good percentage that it's going to work, okay? Now I know a lot of y'all, if y'all don't know who he is or follow him, you know, you're not going to understand me, but you will understand what I'm going to show you. If you look at my screen right here, you can clearly see that per ICT, we have what's called a fair value gap right here. And when we see our fair value gaps, you want to mark it off, okay? Now, when the stock comes back to these areas, that's when you want to take your trade. And he tells us that the mid is like the strongest point for it to reverse if it does it, if it's going to do it, okay? So listen to me good. If I now know that it's a good chance it's going to turn around right here in this area, right? Where do I put my stop loss at if I'm wrong? Well, some people will put it here. Some people will put it up here. Okay? Here is super tight in the option market. And that's what we're going to do. We're going to put it above this area when we take this trade. But what I'm trying to show you guys is this. I'm mixing ICT concept with what I've learned in the option market. And what a friend of mine, Nasir, shout out to Nasir, he put me down with some of these things that I'm showing you guys, okay? In the option market, those same day contracts, the weekly contracts are the ones that pay you the most money, but they're very high risk. So the question is, what is the risk? Okay, we have to make up our risk. So if you look at this fair value gap right here and you want to get in, you also got a fair value gap, okay, and you have an order block. So the fact that we have both in this area is a good chance that if this stock comes up in here, anywhere up in this area, it's going to reverse and come back down. This is what we are taught. So if I know that, I can say, okay, that's where I'm going to take my trade, and I'll put my stop loss either here above this red candle or above this one to give it a little space. Okay, depending upon how many points it is. That's your risk reward. Now, where do we want to get out at? We can get out down here. Okay, we can get out down here. But my point is this: if I now know this, what I'm going to do is I'm going to go get a contract. Here go the contracts right here. So we're going to go over here to go get a contract. I'm going to today. That day is the 4th that we're trading on. This is on demand. So we're going to go to the 4th, and we're going to go get a contract from the 4th. Actually, I already have the contract in here. Okay. We have the 408 strike. So we come down to 408. Okay, it's right here. It costs 89 cents. Okay. Which is $89. And it's a daily for today. And we could want to call it in money. Yes, for this it is. Okay. But my point is I put one there, and then I went to the 11th, April 11th, and got a contract for 414. So I put 2 in there on the call side, and then I put 2 in here on the put side, a 409 and a 401 on the put side. Okay? So if you know options, you understand what I'm talking about. But once again, I'm combining ICT and the option market, the tricks that I learned in the option market. And once again, when I say tricks and secrets, that means that I'm just showing y'all the education or the lack of education that y'all have, so I'm going to call them that. Okay? So now, what we want to do is, we already know where our structure is. Okay? We see our structure. We see what's going on. Okay? We look for our liquidity. We see the liquidity is here. Okay? Now we have to make our attack or where we want to attack. So this is where the money is at. So this is where we want to attack at. Okay? And then now we need to know our point of interest. The point of interest would be, if it reverses, to come down here either below this low or come all the way down. Okay? We can have 3 points of interest that we would like to attack. Okay? And go down to. So we have our plan together and waiting to go. Here is Swing Trade Snipers. We call that a SLAP. SLAP. Structure, liquidity, attack, and point of interest. Okay? And we just found out all of those things. So now what we want to do is we want to go ahead and let the trade run and see if it goes up to this area for us to take the trade. And if it does, we'll be ready on a daily contract. What I'm going to do is I'm going to go both ways so y'all can see how much you would have made and how much you would have lost per what you put up. And I'm going to also show y'all a contract for today versus a contract for a week away for those that are scared to get it. All right? Now, my point is, the reason why I'm doing this is because I want to know, if you now know where you're getting out at, and you say I want to get a stop loss at 166.24, and I know this, right? Why am I getting a contract a week away when I know this contract for the day pays me super fast, and I know I'm only going to be in it for, this is a 5-minute chart, okay? So I know I'm going to be in it for about 20, 25 minutes maybe 20. The bottom line is, it's going to be moving in my direction, and the contract is still good because the day hasn't ended yet, and people are still interested in it. So, and it pays the most. The reason why it pays the most is because most people don't know candles. They know areas and space. So they're going to tell you, don't mess with it. Because yes, you can lose the money, because when you play the area game, your money will go real fast. When you play the I know the price range game, you'll see this thing reverse so fast and bing off them areas and take off. And that's what we're looking for. So I'm willing to take that chance with a contract like that if my plan works out. Okay? So now what we're going to do is we're going to start letting it go and see what happens. Right now I'm just letting it run. Okay, we're close to it. We're close to that area. So what I'm going to do is I'm going to get 15 of both when the time comes. All right. Now, because we're on demand, I'm going to just hit buy market. But you could get a better price if you use your ladder. But I just want to show y'all some things. Okay. So on this contract, we're going to go. We're using a 5-cent stop loss with a 15-cent take profit. Okay. You see it reversed off of it. I'm going to take a chance right now, and I'm going to say, okay, I put up $3,000 on that trade, and I'm going to do the same thing on this one. I bought 30 contracts on both of these. Okay, now we're going to do it on the put side. Okay, so now we have, see right here, we now have, okay, that's 30, let's see, 97, 5-cent stop loss. We're going to do 5-cent stop loss. This one didn't trigger in, so I'm going to do it on my own. I'm going to hit that. All right, so now I have a 5-cent stop loss. Sides. Okay. What we're going to do now is we're going to watch the magic happen. But right now, because we know now where our stop loss is at. Now, if we go to the option contract and we go look, you can clearly see right here. My stop loss on this put right here would be right here below this swing right here, okay, which is 92. Now you want to put it under 91, that's fine. Okay, we're right here. Okay, so now we see where we're at. So what we want to do now is we want to wait and see what happens. We can speed this up. Speed this up. Let's see what happens. Now, what just happened? I got stopped out on my call, right? Because we came back down. All right. So I lost 150 and 150. On both of those accounts. All right. Now we're still in for our put over here. See that? So I went both ways so y'all can see what's going on and watch how this happens. Okay, watch how the magic happens right here. Just watch this area. what you're going to see is you're going to constantly see the money go up and down. But look, this is the week away. This is the same day. The same day contract, I'm already up $105. This one I'm down 15 or 45, okay? That's why I said I was gonna give it a little more space. Sometimes I give it 10 cent stop. And what that do is that usually give me enough space. Because if I put 10 contracts, 10 cent stop, that's $100 loss. Now sometimes it'll be maybe a little more because it's the same day contract. The volatility be a little more. And see how it went up a little bit more over here? Sometimes that happens and it goes above it. That's why you're giving it that space on here. Okay? Look right here, y'all. I'm up 480, almost over 500, 600. See that? Look how fast that's moving, y'all. From getting to day contract. But if I would have lost, this is all I would have lost on each contract. Now, honestly, I wouldn't have got this 11. I would have got this April the 4th, not the April the 11th contract. This is what we trade over here. We get those contracts. Why? Because we know from our teaching where this thing is going at. Okay? Look, I'm up $600 on one contract and only $135 on the other from a week away. Okay? We ain't even hit nowhere near our target yet. And I had only put up like $3,000 on this trade right here, y'all. I put up $3,000. And already we up $600. See the percentage? I'm up 15% already. Just that one big candle is 15% in the option market. Why aren't we using these contracts? Huh? Ask them people who are telling you to trade this stuff. Tell you not to trade it. Ask them why. Why not? Because I'm giving y'all evidence that, this is what happens. This is how you can flip your money fast and get in, get out. Okay? Now, even if this goes and take off and come up, you was already up $600 just from that one candle because you knew an area where it's going to bounce fast. Now, we are taught that once you see this happens and it makes a displacement, which it made a small one, and it reverses and go back up, the wicks do the damage and the bodies of the candles tell the story. You notice that this body of this candle is not higher than these. They're going lower, but they're making you believe that the stock is going up. I now know different per my training. You see that? Now we're dropping. And you come back over here, look, I lost all the money, right? See, that's when you were supposed to get more contracts up here and then let it drop. All right? So as you can clearly see, we're going down now. Now once we do this, you see this hump? Boom. We got to come down. Now it might come past and go through all of this. That's a possibility. But look how much I'm up already, y'all. Look at this. Look at that. You would have got this because you're scared. And you saying you're protecting yourself. No, your stop loss protects yourself. You see that? Stop loss is at 87. That's our protection. This contract is at 95 cents. We got in all the way up here. That's our protection. Okay? We want to always protect ourselves. And you use this. Once you learn how to use this protection, the stop loss, you can now get in with a same day contract. And it's going to perform for you like crazy. Look, we negative, we went back, we lost again because it pulled back up here. Some of this data sometimes is delayed, but I'm just showing y'all because it's going to be buying and selling the same way. But I just wanted y'all to see this, and I wanted y'all to see both ways. We got a call in the beginning, it didn't work. You lost 150, that's all you would have lost, okay? But if you would have went the opposite way, you now know, per what we're going to be teaching you guys, that this has to go back down, all the way down. There are reasons for it because the market is an algorithm, and we learned the algorithm. So I'll be giving y'all videos to show y'all this stuff. But I just wanted to come in here real quick and show y'all this, because I'm tired of people saying how don't trade a daily contract. No, learn that contract. Learn why you shouldn't trade it, okay? So you can learn how to trade it. Because they're tradable. They're there. People are doing it every day. So why aren't you doing it? It's because you don't know candlesticks. When you learn how a candlestick moves, okay, and what it does, you don't get scared when you see it going up right now. Why? Because you see there's no liquidity up here. Okay? Now I got stopped out of here just now. Okay? I got stopped out. But my point is, remember, I could have took profit whenever I wanted to. And honestly, this is going back down. All right? And I know that it's going back down. Now that this put got stopped, but this one didn't. Okay, that's what happened. The one for the 11th got stopped out, and this one didn't. It probably was a cent or two off. So, but you see how this wick got that one, but it didn't get this one, which is okay. Once again, I lost $300 on that trade, but you remember I was up 100 and something, so I could have took that money, because stocks don't do nothing but go up and down, up and down. Okay. I want y'all to see how the money moves, how it goes up. It was just up 600. Now we down. Okay, 135. Up. Now we going back up again. Look at that. Now we up 135. Y'all see that? This is from a daily contract. But the bottom line was, you already know how much you're going to lose before you get in the game, because you know your areas. See, now it's rolling over. We got our first rollover. So now we got to get 2 more rollovers. That's the algorithm. Okay, we're gonna get 2 more rollovers before it's over. But now you're gonna see it drop and keep dropping for a little bit. And once I learned this, all my anxiety went away. I wasn't scared no more. Now, if I wanted to, I could literally wait and do something like, wait for it to pull back and get more contracts. This is probably gonna do it again. See how I did this? It's probably gonna do it again. It made no more fair value gaps. Well, it just did a small one, but as you see, so what I'm going to do is I'm going to let this video run as I talk, so y'all can still see what's going on. But moving forward, y'all, we just want y'all to understand that. Learn how to use them option contract. We will be giving y'all many videos to show y'all this, to show y'all how to use the tricks in the option market. Because what I did was I put together a bomb. I used what ICT taught me, per what Oliver was a teacher of mine that showed me some things, and Mr. Tony. I combined all together Nasir with his knowledge of the contracts. I put them all together. I made a bomb. And when I say I made a bomb, I'm going to show y'all in videos after videos of what I did. And this is kind of like one of them, because people don't listen to ICT because he's not from the hood, one. The other thing is he was in the Forex market, which people think that because we'll make a video on that soon, that because it's Forex, it ain't like what we do in the option market. And they're the same thing. It's all the same game, okay? And once I learned that it was all the same game, then now I know what to do and how to handle it. Okay, you see, look, I'm down almost $1,000 right now, because the market don't do nothing but pull back, and keep going back up in this area to get this money. This is where liquidity is at. Okay, now it done reversed on me all the way, so it's probably gonna stop me out. Okay, I wanted to show y'all something here. The reason why that we can buy these contracts for the daily and get away with it is this right here. The market is algorithmic. It's not money that moves the market. I'm going to prove it to you guys real fast. Let's look at this yellow line right here. Okay, I'm going to take it off. Okay, you see where it breaks right here? Look at the time. Look at the prices. Start right here. What is this close? You got 41, 22, 75. Look up here. When I say close, open, okay, high and low. So look up here when I tell y'all to look for the price, okay? What we say? 41, 22, 75. Let's remember that one, okay? $41.22.75. Okay. Let's remember that one right there, okay, y'all? What is this open? 41.22.75. What is this doji open? 41.22.75. Y'all see what I'm saying? What is this open? 41.22.75. You think that money is doing this, stopping it exactly? Don't look at the wicks, okay? The wicks do the damage. The body tells a story, okay? It stops in certain areas and it won't let it go past, okay? And if it does go past, like I say, it respects it. Look at it, okay? Let's go to this one. 41 on the open, 41.22.75. Same here, 41.22.75. Okay, once it crosses it, all right, it's allowed to cross it. But when it comes back, it respects it again. What is this? Open. 41.22.75. Y'all see that? This is algorithmic. I'm gonna turn this off again. Okay. Now, I'm doing this for a reason, y'all. Look at this. We're gonna keep walking this. Look at this right here, y'all. Open. Where we at? The low. 41.22.75. The low on this one, the same thing. The low on this one, the same thing. Y'all see how it's not breaking that? Look, the low on this one, the same thing. The open on this one, the same thing. 41.22.75. Now this was on 413. Okay, so we're gonna keep walking this. And like I told y'all, once it goes through it, it respects it on the comeback. That's why I made the area. You see how it's respecting the area coming back the same way? Look, you see the respect? Look at it. Money is not doing this. This is the computer system. This is what's called the volume imbalance. That's why I actually drew this. Right here is called the volume imbalance. All right. We'll get into that in another video. But the reason why I did that was because that's how it shows that this is algorithmic. All right. Look what happens. See this? Look, same thing. Y'all see this? What is this close right here, y'all? Oh my God, 41.22.75. Well, this can't be right. So what's this close then on this one? 41.22.75. What is the midpoint of these dojis? Right there. It never crosses it. This low bet not be 41.22.75. Both of these dojis, 41.22.75. You understand what I'm saying? So my point is, if you now know this in the option market, you can now go get a contract. When you see your stocks coming to those areas, when you learn this, you now know that it's not going to go 1 penny below it or above it. That's why you can get that same day contract and get all of that money that's coming with that. Come on now, y'all. That's pure evidence I just showed y'all. This is why we can get those contracts, is one of the reasons, okay? You now know the answer. And if you're wrong, let's say if this was your stock, your area, like I just drew right here, okay? And you see the stock coming in like this, right? And you believe that it's going to go one way. My point is, you now know when you learn this, that if it goes 1 tick above this, and I thought that it was going to drop, I am out. That's 1 cent in the option market. We usually give it 5 to 10 cents, which is not necessary if you learn your candles. So we're going to get into that, you know what I mean, in the future. But I wanted to show y'all that right now, and this is one of the reasons why we trade those contracts. So moving on to the next. I almost forgot. I wanted to show y'all something real quick. Let's say that you wanted to take a trade and you were looking for the stock to go up, okay? And you knew this right here and knew how it works. All you have to do is, if you see this area, you will wait for your candle to come down to here, and then you take your trade. You can put whatever money you want to put on it, because the algorithm telling you it should not go past this. And where would you put your stop at? Even if you wanted to put your stop underneath here, look at this. It only went down 25. So in the option market, that would have been a couple cents. So if you would have put a 5-cent stop, it would probably be down here somewhere. Okay? But my point is, you would have been risking this little bit. Let me show y'all right quick. If you would have took the trade here, right, you would have been risking just this, basically this yellow box, maybe a little more. Okay? Maybe you might want to go a little more if you wanted to. Okay? Maybe come down here. But look at what you would have got. You would have got from 41.2275 all the way up to, because we would have knew to get out here because of consequence encroachment right here, or this wick. So we'd have probably got out here at this top at 41.2550. You know how much money that is in the option market? And you could have went heavy on your contract from right here, y'all. This is why you just repeat it over and over and over. It happens 1,000 times a day. If you look, algorithmic. You see it? It happens all the time. Down here, when I was talking earlier, the reason why it went up, because it hit another area. I bet you this open right here is, this open right here is 41.2175. What's this doji open? 41.2225. Okay? Right? My point is, it came down and respected it. And this is an area where orders is at, and that's what made it bounce. So, once again, y'all, I'm just trying to show y'all. You don't want to believe me? Don't believe me. Go do the research. Algorithmic, baby.